Okay, we're back. Sorry for the technical difficulties. Yeah, let's go ahead and get started. So just do a small little recap. If you're just now tuning into the stream, today I want to do a nice chill stream. If you notice, I'm in a different location. I'm actually spending some time with some family. And so as I visit, I did want to pop in and still talk crypto with you guys, give you guys some insights on kind of what I'm seeing and, how things are moving within crypto and how to kind of shape your mindset as an investor, so to speak, within the space with the things how they're currently going. So, I want to talk about a couple of things. I want to talk about decision making and being able to look at opportunity costs. Right, these are things that as we begin to invest in through time, when we have a goal of trying to have a nice financial freedom, I guess you can say, at the end of our investment journey. Our goal is to really decide, okay, well, when are going to be the points when I invest? And how do I do so? And then, so is there opportunity cost when I don't take action versus when I do take action? And so, I think that's something important to understand. We're going to look at some on-chain data. We're going to look at gasoline and seeing if that's moving any differently. And so I got a action-packed little show here for you today. It may not be as long as what I normally do because I might have some family popping in here in a second, but I want to go for as long as I can. So appreciate you guys hopping on and going on this journey with me. So with that being said, let's kind of address everybody in the chat. What's going on? So Joseph, nice to see you as always. And let's see who else we got in here. Cool. Navin, what's going on, man? So I appreciate you guys kind of just staying in here. Sorry for the technical difficulties in the last stream, but let's kind of get into it and talk shop, man. So I'm really looking forward to this one. And let's do it. So now we got this situation figured out. Let's jump straight over and look at everything as a whole. So in the market, what can we see? As of right now, Bitcoin is having a decent day. So yeah, stocks opened up and did a pretty decent this morning. And so Bitcoin followed as well. So one thing that I've been noticing with Bitcoin and what I've been saying, especially over the past week, past couple streams, is we're going to see a channel, right? And so we've been seeing a channel between 21K and 19K. And this is that a consolidation range of people really not knowing if they want to continue to buy or if they want to continue to sell. I think there's a lot of, well, not as many people in the market, but whoever is left in this market, especially buying Bitcoin, this is one of those times of where it's just like stagnation. And so this point of stagnation, especially in the downtrend, is really meant to make people fall asleep, right? People fall asleep when things aren't very volatile in a sense. So the biggest thing for me is I'm making sure I'm keeping my eyes peeled, paying attention, especially to other projects that are building during these very mundane, boring times. But essentially going back to Bitcoin and seeing in other time periods, especially in other bear markets, when things were just very boring, was that a good decision to invest during that time? And so that's the process that I kind of go through when I'm thinking about doing anything in life, making any decision. If I could try to look back in my own life or look back at some advice that I got from somebody else. And when things are kind of not, I would say, when things are irregular, right? So when you're expecting a certain thing, but something else is happening, take a look at, what's really going on and say, okay, have I done well during times where, maybe I was a little bit unsure of where things were going to go? Well, did I do well when I had some understanding, right? And so one thing I know about myself is the times where I've done well, especially investing wise, is when, things were kind of just like, hey, you know what? I've been looking at this for some time and I gained a lot of understanding. And right when, most people aren't paying attention, I striked. And so that's kind of the point of where we're kind of at now is, things are a little boring here within crypto. But what do we know? We have come down significantly from the tops. And then so, with some of the on-chain data that we're going to look at, we're going to learn to just look at risk overall. And so risk has to be an important thing that you're looking at, especially when you're getting into your investment. And then another question that you have to ask before you make your decision is, are you a tourist or are you trying to move in? And so I say that by, really trying to say, are you just here to visit? Are you here to just make a quick buck? Or are you trying to build something? build some type of legacy, some type of financial freedom that could actually be beneficial for you long term. So when you move in, that means you plan to be here for a while. When you're just a tourist, maybe you just get into your Airbnb and you're there for a week or two and you bounce. Or maybe you're just here during the good times and you bounce. One thing about investment, right, is markets go up and down. That is going to be a guarantee. And then so I think that people have especially in recent time, especially within the span of the last 2 years since COVID, people have a warped version of what they think investing looks like, is because they had an expectation that things are always going to go up. And so the one thing about being a prepared investor is understanding beforehand that things can go up, things can go down. But when things go down, you could see that as a great panic or a great opportunity. And so assessing where you start from, what your belief in, and just investing in whatever asset is at that point in time, and then have you set a schedule to be successful with that investment. So all of that stuff comes into deciding, and all of that has to do with opportunity costs. And so as we continue to look at this stuff, and I'm going to continue to come on here week by week, week by week, week by week, try to encourage you guys as you guys are putting your hard earned money into things. Are you critically looking at things to say, hey, is this going to benefit me not just today or maybe this week, but is this going to be beneficial for me 10 years, 20 years from now? Think long term, because the thing is, yeah, I can understand no one is guaranteed tomorrow, but at the same time, so many people shoot themselves in the foot by only making decisions for tomorrow and the next day. I want to start thinking about, hey, what can I do today that could help me when I'm in this next phase of life, right? So maybe that next phase of life might be retirement for you. For me, I'm retired. And so even though I'm at a young age, I still want to be able to say, hey, the income that I have now or whatever I'm doing to provide for myself now, I still want to be able to use some of that money to help me in the future, right? And so there's so many things that are unknown in life. You just want to help yourself financially to be able to handle anything and be able to do things that you've always wanted to do. I just really think that's one thing that is just not talked about enough. I understand everyone wants to be a millionaire, and yeah, when you're not, and you've maybe been in a disparity of capital, yeah, it's just like, yeah, I just want to live a millionaire lifestyle. So be able to afford all the dinners, go on all the private jets and all this stuff. But what I've learned and what I've encountered through my life is the best the best asset that you can have is your time. And so that's all finance is, when you have an abundance of finance, it just gives you more option of what you want to do with your time. And then so if you can get people to focus in on that, like, because that's one thing I start to focus in on more, it actually made it easier for me to make money through time, is because I stopped worrying about how much I can make and what the numbers look like. And then I traded that for just a good strategy that was going to help me get to where I wanted to go. And time was the biggest thing that I wanted. And so when you have your strategy focused around something that's worthy, outside of just saying, hey, look, I got a whole bunch of money, because at the end of the day, nobody really cares about that. At the end of the day, people care about impact. That's one thing that I care about. I know I'm on my soapbox on this topic, but I really just want to talk about that really quickly, because a lot of people get a rude awakening of when they do have an abundance of money, they squander it because they have their goals mixed up, right? And so my thing is say, hey, I want to help people be able to start off their investment journey, make it to the end, and then stick and stay with where where they wanted to go, and be able to stay there long term. And so, yeah, I just really think it's important with your mindset, right? With your decision making, learn how to assess risk, go through and just do as much as you can to say, hey, I have a plan here. Talk to people that maybe have, experience in planning within investing. You guys know that I'm always free. Hit me up, and I'm always willing to help people that are trying to be serious about this aspect. But just in general, after that, now there's opportunity costs. So let's talk about the opportunity costs. But really quickly, we have BTC up, Ethereum up, stables, they're stable, right? A little bit down from $1. But for the most part, the whole market is seeing a decent green day. Nothing that's going to blow the doors off of anything. But as of right now, let's kind of jump in, see this corner here. What can we see? So we got We got Matic up 10%. Matic has been very interesting, especially within the past couple months, especially on the upside. Now, it does track with a lot of the stuff, but on these rebounds, we're seeing Matic do some really cool stuff and maintaining price compared to a lot of other coins out here in particular. We have Crow up just slightly at 11 cents. We got Chainlink up slightly. We got Sand up at about $1.18. We got ApeCoin. So if you are into the memery, I really encourage people to stay away from stuff like this. But if you are, it's up 4.8%. Axie Infinity, one of crypto's first successful games, is up 14, or it's at slightly at $14. Let's see, what else can we see here? Let's kind of hop over to this corner. So we do have a couple things that are down, right? So we got XNX down about 3%. We got Engine up 5%. So that's pretty good at 54 cents. What else do we got? Kind of, and this is mismatch here. So these are your, your mid caps, right? Going into lower caps. And so just know, same thing when you're talking about risk, just know when it comes to volatility, it increases basically the smaller that these squares get, essentially. And so just know that, right? Especially when you get into these, chunk of coins here, these are very, very, very low cap coins. And just so know, especially in the bear market, these are going to be things that are going to be very risky if you're concerned about what happens in the short term, because as we know, Bitcoin goes down to, 16 or 14K. That's going to push these alts down another 40, 50, 60% during that time period. So you have to say, can I stomach that? And the other question is, do I believe in said coin? And as we know, majority of these coins are not going to stand the test of time. And so that's why even looking into all the small stuff here, right, probably don't want to spend too much time doing that. But you do want to focus on these larger cap coins because they do have a little bit more proof of saying, hey, we have some type of staying power, but then they have to prove themselves through time as well. Phantom down a little bit, 25 cents here. And so as we continue looking, like overall, and you got your SHIB up, we got Aave up, and so the biggest thing is like, I mean, we're at an incredible time period for things that are going to make it through this bear market. Incredible time to really say, hey, am I an investor? Am I willing to accumulate? Because the thing is, I remember when Aave was trading at double this price, right? I remember when Phantom was trading at 10 times this price. And so the thing you have to ask yourself, when the prices get lower, that decreases risk quite substantially, right? And then, but what does it do? The opportunity is that much sweeter because it takes a lot less money to move these coins back up. And so that's the cool thing about having lower pricing, is those X's actually come a lot faster when things get up and going because there's less money held in these coins. Therefore, you're already positioned for the influx of capital that will come in after you. And so it's just simple math on how this stuff works. But nonetheless, when we pop down in price, there's opportunity there. And so you have to ask yourself, opportunity cost. Am I going to have the opportunity cost of doing nothing? You may do nothing. You may do something. It's really up to you guys, right? But I did want to go into a small definition of opportunity cost, because I really think as we use words, understanding the meaning and the power behind them are super important. So as we go ahead and read, it says the loss of potential gain from other alternatives when one alternative is chosen. And so life, there's always decision, and there's alternatives to everything. Hey, am I going to get the lemonade or the iced tea, right? Are we going to have pizza or burgers? And so, I would say those are different, right? Let's kind of put it in a more realistic sense, right? Let's say I'm an employee and I work for an employer. And so, maybe I'm up for a promotion soon, potentially. And it's been a long week, but, I'm just like, you know what? I could kind of wrap some things up, do a little extra work on that Friday before I head out for the weekend, or not. And so there's an opportunity cost to that, because you could, say, you know what, I'm good for the week. I'm tired. I just want to go home and enjoy the weekend. Or you could put in that little extra 30 minutes or that little extra hour, get a little more done. Ooh, maybe your employer sees that you got a little bit more done. You're there a little bit later. And you do that in those moments where it's hard, and then you actually end up getting that promotion. versus potentially not, because somebody else beat you out because they were taking action. So that's what I think about when it comes to opportunity costs is and I can only just talk about my life. All the times where I've just put in that little bit of extra work, that little bit of extra strategy, that little bit of extra planning, it's always helped me. It's never done me a disservice. And so I would say that I always try to take advantage of opportunities that I know that present themselves to me. So there's a couple questions that I've answered for myself already within crypto. I know that there's opportunity here first and foremost because I've experienced it firsthand, and it's when it's great, it's been amazing. So boom, I know that there's an opportunity here. Now from there, I know this is something that I'm passionate about, I care about. And then so there's the number two aspect. And then so as I continue to think about crypto and what it means to me and where it can take me and where I'd like to go with it is, all these questions, right? And then so finally, I know that crypto has a chance to not only just be here for a second, but a chance to be here for a long time. So investment wise, all of that stuff screams opportunity to me. And so I know that there's a cost, right? So there's a cost of what? Learning about it. There's a cost of spending time, right? But I know the opportunity is greater than the cost. That's why those two words are put together, right? Opportunity, cost. And so they kind of play on each other, but you cost yourself on the opportunity by choosing an alternative. So, what is the alternative of crypto? Holding fiat, for example, doing nothing and not investing. Or, for example, you have a cost of only wanting to invest when prices are high and just buying the hype. That is a cost. And then, so what I really try to help people understand, and even myself, is learn how to see things from an opportunity aspect and then assess the cost for it. And you want to make the cost work in your favor, because we kind of talked about two different costs. There's cost of doing nothing, but then there's cost of actually putting in the time and the work to get that opportunity to be the best opportunity it can be. So I'm hoping that y'all are tracking what I'm saying here. But from there, let's talk a little bit about gasoline. So, as we know, United States gasoline prices have gone higher due to inflation, and the Fed still plans on raising those interest rates. But what can we kind of take into contrarian look at and see just visually, are things slightly moving? Are things getting better? Are things getting worse? And so, one thing that I did see that was pretty inspiring was here at this site. And so, my whole basis of really doing this YouTube channel and show is to really give you guys tools. Like, I am not hesitant to show you guys and tell you guys, hey, here's the website that I'm using. Here's how I'm thinking about this. I don't hide anything. I want to be as transparent as possible. I know a lot of people out there, they don't show you everything and they just want you to get a little snippet. I want you to not only listen to kind of how I think about it, but go do your due diligence, pop in the same website and look at it for yourself. And then that's how you really get enlightened. That's how you really get informed, and you confirm your learning by doing the action yourself, right? And so, with that being said, here's a great website. It's EIA.gov, and then you can go to the petroleum/gasoline section, and from there, one of the cool things is you can see, right, how prices for petroleum and gasoline, they're fluctuating. So the average price in the United States, and this is a couple weeks ago, it was about $5, and through the weeks we see it ticking down, and so that's actually a good thing to see. And if you kind of want to see a representation, and because you can look at different states and stuff like that, but if you want to see a representation, it kind of was pretty stagnant, nothing too crazy, but all really quickly in the month of February was just a big hike in gas prices, and it's been on an uptrend, and we're finally starting to curl over and downtrend slightly. So the goal is, hey, we'd like to see us continue to come down. That's one positive for inflation for the economy. And we need to pair that with a lot of other stuff to get inflation down, but this is one metric that we can look at. And so that's a good thing to see and notice, is seeing that we've been on this uptrend for the price for gasoline. We started to kind of level off, but then we had another burst up, but now we're starting to come back down. And, the goal is to really get us back down to where our average was prior to, this inflationary period. So, give or take depends on where you're at, in between that $3 range and that $4 range. So if we can get out of the sixes and the $5 ranges over the span of the next 6 months, I think that'll be great. And thus, inflation will go down. And that means people will be willing to start looking at asset prices in a different way. So let's go from there. I want to talk a little bit about the fear and greed that we're seeing and see if there's anything that is shocking. And to that thought, not really. Everything is pretty much what it's been. The narrative, especially over the past month, is where we're seeing these low scores for this metric, fear and greed index, and we've been hovering under 20 for some time now. And so today we're at 19, which is a little better. Like, it's better than 5 or 6 or 10. But the only reason why I think that we have 19 is because we're not capitulating at the moment. The moment that we have some volatility to the downside, we'll see this metric go down to the single digits. But as of right now, we're under 25. And then same thing, as we assess risk, we assess opportunity, and we can only go off of the data from what Bitcoin has done. And what I try to do is incorporate a whole bunch of other data from outside of crypto. And so as we look at everything across the board, just in general, things are on extreme discount. And so that is to be true. And so the goal is for any investors to identify the good stuff that's on discount and hold on for the ride to where you are able to get a gain that's, I would say, that's to your liking. And so from there, let's go ahead and go into Bitcoin. And so really quickly, we had something similar here, which is kind of interesting, right? So in the month of May and in some of June, we kind of had the same thing of where it's just very mundane, not much, range bound. And then we had a capitulation. And then so kind of the same thing of, what I'm kind of looking at here is just really paying attention to how this price is moving. And as of right now, we have two levels. And so we have a level at 21,715 and another level that I would put right around 18,691. And as we can kind of see, so we had this level here, right? But then we broke down below it. So this line is invalidated. So we'll take that off. And so that range got a little wider, but nonetheless, it's still pretty tight. And so this is on the 8-hour chart. So for example, if we were to just take a Fibonacci retracement from this low to the high, right? The interesting thing is, right, if you pay attention, we've been knocked down off this 0.236 two times. So we came down, we tried to test it and break it. And the whole point of this, if y'all have been paying attention to this channel, even in this tight frame here on the 8-hour chart, we can use these tools and see, okay, well, where could things go even in the immediate future from a probability standpoint? No one can predict, but we can get an idea of what probability looks like. And generally, a lot of the time is when we've had a downtrend, okay, then we form a local top, and then we kind of head back down on the way back up. If we can beat this 0.236 level, there's a good chance that we could break this local high and go a little bit higher. But as you can see, we've been rejected not only once, but we've been rejected twice. And then so we're still holding right here around this golden ratio. And so that's the thing that we want to look for, especially maybe within the next day or so, is seeing if we can break two levels here. So if we can break this first level, and I'll put a price call here, if we can break this first level at about $20,777, that'll be pretty positive. Then we want to retest it, use it as support, and then break this level here at 21 and some change. And so that's just some immediate, like easy, like anybody can do this. You just pop open TradingView and you can do the same thing that I'm doing and just get an idea of, how things work and how markets move, right? And so as of right now, not too much, but nonetheless, right, if you just want to look back at recent price history, there's nothing in this space. And then as we drag it over, you see nothing in this space for quite some time. And then so that shows you, and then that can help you assess risk within time period. And so within the last year, we have not been in this time or we have not been in this price range of 20,000. We haven't been here. And the last time we were here was this cluster. And so this amount of support here in November of 2020. And so this is interesting to kind of take a look at. And so, and that was about midway on that bull run in 2020. And so, as we continue to just focus in, right? We just want to focus in and kind of look at things. I'll do a few things and throw up a few indicators here. But just like I said, we want to look at decision making today and risk. So there's another metric here, and it's called the risk reserve. And so I'm going to actually put this on the monthly. And so one thing that we've been able to see for Bitcoin, as always, up and to the right. And so let's kind of zoom in. But just from a risk standpoint, we are in uncharted waters for BTC because we are in a potential recessionary time. Bitcoin has been able to thrive, especially in a time period where stocks were thriving, real estate was thriving, everything was thriving, and we're in an expansion phase. And then so we are hitting even an uncharted measure here with this risk reserve. But nonetheless, it still helps us assess where we're at. And so through time, very few, I would say, days or especially months, I would say, in Bitcoin's lifetime has it spent below this green portion here. So let me zoom in on that. And then so you had a portion here, here, slightly here. This was COVID, and then here, right? And then so at this point in time, on this metric for Bitcoin, this is the least riskiest of a buy that Bitcoin has seen. And so I know these prices are higher from where we were 3, 4, 5 years ago, but nonetheless, that's just the system working how it's supposed to work, right? The price is meant to do that. Why? Because we have the halvening and we have other features and metrics, especially for Bitcoin, hash rate, all these things produce a steady growth through time. And then we do have these crazy volatile times when we get well above, right? So investing when prices are high like this is the top of 2017. Here was a recent top back in March of 2021. So this is when most people like to invest. I for the life of me, I do not understand why people are only willing to invest at these tops and they do not want to assess risk and do what they need to do when things are at lower risk points. But nonetheless, most people don't think in these terms when they're using their money to try to invest in something. And so the whole goal is to educate yourselves, be a savvy investor, and understand what these metrics look like and how they act through time. And so, yeah, I mean, as we are sitting here today on this stream, this is a time period to where there's opportunity cost for a lot of people. And so, what side of that are you going to be on is the question. And so, I didn't want to spend too much time on Bitcoin. There's a couple things I do want to do here. We'll go on the weekly chart because we look at the RSI all the time. We look at the MACD all the time. We'll throw some moving averages here, and then I want to look at some Bollinger Band action here. And so we can kind of dial in on just the probability of where we're at now. And so let me just adjust these. So we're going to look at the 21-day EMA. EMA. And then on top of that, we'll look at the 60. We'll look at the 250. So let's change these colors because that looks kind of confusing. One sec. Let's go here. And 250. Let's do this. All right, that helps a little bit. So the biggest thing is, we're using these metrics. So let's kind of go over Bollinger Bands one more time. So Bollinger Bands are really helpful to give us a little bit of moving support and resistance, right? And then so there's that median line right here. And then you also have, these outer lines. And, what we see is that when you really push down on the bottom of the Bollinger Band, this is, essentially, this is, what capitulation looks like, right? But from there, right, when you really see yourself trying to deviate away from the bottom, And through time, the goal is to penetrate this midline and then get on top of it and then start attacking the top of the Bollinger Band. And so, because what that looks like, right? When you're starting to attack the top of Bollinger Band, that means you're in bull phase. So, as you see, for example, this is what that bull run looks like. We're on top of the midline and on top of, pressing up on the top of the Bollinger Band. And for example, here we have been, pressing the bottom of this Bollinger Band since May. And so the question is, how long will we do that? And so for now, we'll move these price calls just so we can get a cleaner look at these moving averages. But an interesting moving average that as we continue to track, especially on the weekly, is this 250 week moving average. And so a lot of the time, this 250 is a second backstop to the 200-day moving average. And so as we kind of assess and look at things, what we've seen here is we've wicked below it once, and we've actually got a couple of weeks closed below it as well. And now through time, we want to see if this continues to just hover around this portion. And so over the next month or two, we tend to hover around this 250 day. Then that may be telling us, hey, we may start to be in somewhat of an accumulation range. Or do we just pierce through it, right? And we go straight down past it? Then that means there's still some sellers left in the market and we have not reached the bottom. So this is how you understand these things. It's just like by paying attention week by week, take the data and then you assess. And then so nonetheless, we do know that things are on an incredible discount. That's why having a strategy is how you're investing is super important as well. And everybody has a different way to do it because everybody gets paid differently, for example. But with that being said, same thing here. We've used it as a nice support. And COVID was just like a one-off situation, wasn't a full bear market. But just to let you know, right, we're already touching it here. And we did not touch it at all in the previous bear market. So what does that tell you? Maybe this opportunity, and going based upon what we're seeing with the risk metric, we came down to this moving average. We did not do that previously. So what does that mean? Less risk, but also more opportunity because of where things are at. Even though this percentage loss was more, right? Just from a risk assessment probability, this is just a better buy, even than this period here, which I know that seems crazy. And so when you're living through something, you're going through it, you're almost like, I don't believe it. No, I got to see this go even lower. But even if it dumps lower, that just proves the case of this is a better buy than previous bear market here, right? And then even, and if you were kind of extrapolate this out, right, you'd see that this one was barely touching it as well. And so, yeah, using these Bollinger Bands, as you can see, you can tell, especially on this weekly, when you're in a bull run. Like it's easy to see. When you're in a bull run, you spend majority of your time on, touching the top of these Bollinger Bands. When you're in a bear run, you deviate from it, you come to the middle, and then you start pressing down on the bottom. Bull run, you're pressing the top of it. Bear run, you transition, get past that midline, now you're on the bottom. And so it's clear to see now where we at. We're not anywhere close to the top of this Bollinger Band, because if we were, we'd be at $50,000. And then so we're more than half of that. So we're not at 50K, we're not even at 25K, we're at 20K. And so easy to see the difference between trend. And now the question is, we want to see this deviate more. So right here, just like how you see it deviate away from the bottom of this Bollinger Band, you create this basin, and then you start attacking the top. And that's what we want to see when a bottom is starting to form. And there's no way of predicting that or knowing that beforehand. It's just we've got to experience it live in real time and take good actionable steps and have good decision making through this time. And so that's kind of, what we're looking at. So last thing I do want to take a look at is just some on-chain data. Before I get in that, let me jump in and check out some of these comments and see if y'all have any questions, if you have any input as well. All right. Let's see here. Okay, let's put this one up here. So wonder if the gas decrease is related to the reduction of employment. I think that's an interesting question. And so I would say employment may be a separate issue. I think that they work kind of together, right? In a way, but not necessarily to where they're direct impactors of each other. I say that when gas prices are going back down, especially after a super inflated time period, it's just more deals being cut, more things getting worked out to where the United States says, okay, we're not gonna allow you guys to continue to gouge us or whatever the case may be, or they're finding better ways to get the gasoline imported cheaply or cheaper per se. I think the main problem is because we don't produce enough of it here like we could, but that's a whole nother story. As far as employment goes, employment is just a function of companies getting squeezed financially. And then so they have to make decisions on who they're going to keep and who they're not. And so I don't know if the two directly correlate with each other, but I knew they do play off of each other. With that being said, let's see here. So eventually earnings will start lagging in equities due to inflation. I think BTC will still be correlated as closely at this point. And so that's an interesting point. So we have some earnings coming out. So I know, for example, we have Amazon and some other companies coming out, I believe, on August 4th. And so we'll see. I think earnings are going to be not as good as what people think. And then so when the market sees that, we're going to see how that representation gets priced in, because there's always large players trying to price in these things that they think that are going to happen, that where they're not surprised on the back end. And then so I just really really believe that Bitcoin is still going to have a high correlation regardless. If earnings are good for companies, and then Bitcoin and equities will go up together. If earnings are bad, then Bitcoin, it's just one of those things. It's a risk on asset, just like many of these companies. And then so for the life of me, I don't think it's going to be treated any differently, because that's not what we've been seeing. If it's going to be treated like a hedge against inflation, a commodity, then the price will be going up. And then so nothing is going to like snap magically happen in a span of like a week or two or a month to get real decorrelation. That has to happen through a process of years, right? And people to turn their logic away from how they see it and believe in a lot of the qualities that it does have as a store of value away from traditional markets. But as right now, to the upside, everybody enjoys when it's correlated, right? And that's the thing. We can't pick and choose when we want it to be decorrelated and when we want it to be correlated, because in the upside, it's very correlated to the stock market. It just outperforms it percentage wise because of the features of these coins per se and their low market caps. And so, we'll see what happens. So this could be a long ride. I'd say just be patient, right? Just whatever you consider long, right? My thing is, I know that I'm getting good stuff, right? I know every time that I'm getting Ethereum, I know that I'm buying a good quality coin that has use case that's going to be here for a long time and give me what that opportunity that I know that's going to come. And so, but if I were to really throw something out there, I don't like doing projections on what prices we could hit at what time, or where the economy is going to be by a certain time. But I'm kind of looking at things and prescribing to that notion of majority of like what has happened as far as down action, as far as price goes. We've gotten through a lot of the wreckage. We've gotten through a lot of that wreckage. Now, is there still some wreckage to come? I think there's a good potential of that. But I don't think overwhelmingly that things are just getting started and things are going to go straight to doom over the next 2 years. I really don't see that happening. I really see that we still have some things to work out, obviously, but these things will get themselves figured out and the markets will respond in due time. But anyways, yeah, I'm glad y'all are tracking. This is a little bit of a different stream today. I know I'm just doing a little bit more talking and just trying to, talk aspect of, like I said, decision making and looking at opportunity costs. But cool. I'm glad that we can dive deep like this, because we're all going to become better from this. Like we're all going to be able to look at things contrarily and be able to have a consistent view and not just go off of the emotion of how the markets fluctuate up and down. And that's how you really give yourself a good chance to do something good long term. But with that being said, let's jump back into it. So let's look at some of this on chain data. and we'll go here. So Glassnode, one of the best places you can go to just get a numbers based approach to how things are moving within the market, especially for Bitcoin. But here's the interesting one that they've kind of recently added that I think is pretty cool. It's the top cap model. And so this is more so for identifying tops. And so the cap is a factor of 35. And so you have the average cap, which is this line in blue. And then this line is red is a multiple of 35. And this line in orange is a multiple of 15. So one thing has been definite that we have touched this 15 every single bull run. And so that's a key thing in the future to really pay attention to. So, for example, we'd know that we'd be overvalued if today's price was sitting. Let's see if I can zoom in on there. Here, let's kind of see if we can go in on this metric a little bit tighter. So I don't know if this is going based on price. It's giving us the amount of Bitcoin. I see. Yeah. And so if we just visually use our eyes, right? And this is going based upon market cap. And so if we were just kind of going on, where things are at, the current market cap, and this is just Bitcoin by itself. So don't want to get everyone confused thinking that this is all of crypto. This is just Bitcoin by itself. And so the Bitcoin market cap is sitting right about 386,000 or 386 billion. I'm sorry. And this is here on Glassstone. And so from there, how we would know we're overheated is if that market cap was here at this top cap. And so that would be at 2.2 trillion for Bitcoin. And so just take a look that we're well under that, and things would be really, really overheated if we were at 5.2 trillion for Bitcoin. And so the interesting thing is that same thing that we don't always come down to this average cap whatsoever in bear markets. Same thing here. We barely touched it, like very, very briefly. And what you've seen here through each bear market, we've been getting further and further away. And so I'm not going to really use this bottom average cap as much, but especially for the top cap, really paying attention to this orange line in the future. So yeah, go ahead, subscribe on Glassnode, and you can track this as well. But if not, yeah, come tune in here, and I'll make sure I'm giving you guys this info. But as we can see through time, we have a steady increase, and then that's just the understanding of why crypto is such a powerful vehicle, because through time, this is what we want to do as investors. We want our portfolios to just be increasing through time. And then so we want to be in this game for not only just a year or two or three or just one cycle. We can put these cycles together and really, really get the butter from the duck. And that's a term that one of my old coaches back when I played ball, he would always say is like, you want to get the butter from the duck. Essentially, you want to squeeze all the juice out of this thing. And then for you to do that in crypto, being here through time is how you do so. And so that's the thing. As we see this incline for all these metrics, there's a reason for that, right? And so as we can see, as we've had this the past 13 years, this incline has yielded a lot of gain for a lot of people who understand how to play it. And so now that we're in the game, let's play it and play it at a high level. And so, yeah, we are nicely undervalued. That's what I'll say. We're nicely undervalued. Same asset. And as we can see, there's these boom and busts. Okay. Now from here, let's kind of look into another one of these metrics. We have the investor tool, which we've talked about before, the top cap, the pi cycle top, the mirror multiple, and we can dive into that one again. I like the mirror multiple. The biggest thing that I really want to point out with all this data, right? So this is going to be a good indication of looking at what the bottoms look like, is just look at the price history. And if you just were to take a good gander, I'd say about 98% of the price history for Bitcoin is above the bottom portion of this metric. So you're giving yourselves a high probability of winning by doing something down here. And so if you're an investor, put that together, right? You got Bitcoin, you got fiat. Which one do you want? Which one's going to give you a high rate of potential return? You have to answer those questions. And at different time periods, right, that answer changes, right? Because at this time period, right, you probably would, rather trade some of that Bitcoin or some of that crypto in for fiat until it becomes undervalued again. And then you pick up some of that BTC or cryptocurrency or asset. And then that's how you work these boom and bust. So you need to be a savvy investor to be able to do that. Or the easy strategy is just hold through time. But how you get the butter from the duck is learning these tops and these lows. And I'm gonna keep saying it. I think that may be the phrase of the week. Butter from the duck. And so, that one's an interesting one to really look at. And then the NVRV score. And we'll finish with this. And so as we look into this metric, same thing, assessing overvalued and undervalued relative to its fair value. And same thing, the price history for Bitcoin spends majority of this time outside of this undervalued portion. So we haven't hit the bottom of this metric, which hence, hey, maybe we have some more to go down. But nonetheless, taking advantage of these opportunities is what separates the average investor from the okay investor. And the thing is, we're in a different time because basically if you're invested in anything over the past 10, 12 years and just spent the time, you would have did pretty well. But how you become a legit institutional grade investor, and you can do this for your own personal finance, is by putting together this game plan, putting together a game plan, looking at things critically, right? And understanding what the heck is going on. And so, as we're looking at this here, right, we are in a unique spot where we have not had much price history where this metric is in this green. And so what do we notice? In this green, it's not here forever, but it spends much more time out of the green and in the expansion phase. And so as we know, when we're buying bottoms of whatever it may be, whatever asset, but especially in crypto, this is how you get the X's. People always ask, how do you get the 10X, the 20X, the 50X? All is by understanding the game, understanding the right stuff to get, creating a plan. And I'm going to keep saying it, right? Executing that plan. And that's how you get the results. And there's opportunity costs. There's opportunity costs. So I'm glad that y'all are here, putting in that time. You're paying the cost of what it takes to essentially be a good investor. Nobody can be a good investor by not knowing anything. I don't care what they say. I think some people can get away with it in an expansion phase, but when things are not an expansion phase, you got to have some know-how to you. And there's a lot of people that kept trying to buy this dip and that dip and that dip and did not recognize that things were starting to turn around. But if you were looking at this data, you would have had an idea, So with that being said, that's all I got for you guys. I'm glad that y'all came and joined in. Butter from the duck gang. All right. You know what? We're gonna rock with that for this week. I don't know if that'll stick, but butter from the duck gang. Let's put that up. Yeah, but we'll see. So yeah, I hope that this was a sober look for y'all. I want to continue to try to construct this content to just be nothing but helpful. I'm not sitting here trying to tell you what to do. I ain't your daddy. At the end of the day, my goal is to just be an asset for you guys and kind of help you with anything that you're trying to do investment wise in the crypto space. As I continue my journey, it's been one heck of a journey for me so far. And I want to keep going, even though this journey has been like eye-opening and this has been like, wow, like a lot of great things have happened. I've also learned some things along the way, but I know that this journey can go for a very long time. My goal is I want to be in this game, all the way to 2030 and making as many right moves as possible to solidify day by day the life that I want to live. And so I'm hoping that's something that you guys want to do too. And I'm looking forward to continuing on with y'all. So appreciate all 10 of you guys who are in here. We're going to be rocking and rolling. I'm going to do at least one more stream this week, so be on the lookout for that. And if y'all want to see anything in particular or want to hear about anything in particular, let me know. Write it down in the comments. I'll try to read those and respond to those. But as I'm kind of crafting for the next stream, I'll take that into consideration, and that way we can focus on particular things that you guys want to look at. So it may be coin requests, it may be looking at specific topics economically. All these things are helpful to know because to help us understand what we need to do with our investment future. And so yeah, that's about it. Until next time, peace, y'all.